All right, guys. So today we're going to talk about liquidity. All right. And so liquidity is a collection of money orders. Right. Now, what are money orders? Simply each time when you buy or sell, right, you're going to see something pop up in the left corner of your screen. It's going to say order filled, right? That is basically you purchasing the commodity or whatever you're buying and selling, right? So we're looking for a collection of entries where buyers and sellers are entering the market, right? And so liquidity is going to come in forms of double tops, double bottoms, or triple tops and triple bottoms, right? So one of the easiest ways to identify liquidity, right? You're gonna have your M shape, right? This is just one of the common ways. It doesn't always have to look like this, but a good reference point for identifying liquidity for your double tops, it's gonna look like this, and then for your double bottoms, it's gonna look like this, right? So just get used to identifying a W or M, and then I'm going to show you the power of liquidity, right? So with these collections of money orders or stop losses, like the market likes to sweep these order outs and then reverse, right? So we're just going to pull up an example of some liquidity, right? So right here, let's see, we have some liquidity right here. Let me draw get my line tool. Okay, cool. Yep, that's how I want it. Alrighty. So we have some liquidity right here. Right. We got some liquidity in here. Let's see. Let's see if we have any other forms of liquidity so I can show y'all what. Actually, this is perfect. This is perfect, right? So let's play this out step by step. Right? So first, we're in an uptrend, right? Higher high, higher low. Higher high, higher low. Higher high, higher low. High, low, higher high. Break of structure, right? So we first get our break of structure, right? We're going to go in the order of our strategy. So first, we identify structure. We broke structure, right? After we break structure, we then do what? We draw our fib, right? After we draw our fib, we identify if we have any gaps. Or no, we identify our order block, which our order block is in the zone. Let's see, mark this out. Right, we have our order block that's between this 886 and the 618. Cool. Let's see if we have any gaps, which we did after the push. Also, bullish engulfing, right? Another common confirmation. Let's see here. We have a gap right here, fair value gap, and here, and that is it, right? So we have multiple confirmations for this trade, right? But now let's get into liquidity, right? If you identify areas of liquidity, look what happens, right? These two areas of liquidity or equal lows, right? Liquidity swept it out. It swept out these stop losses, right? Then what did it do after it swept it? It reversed, right? Now, that's for this section of liquidity, right? So for this section of liquidity, it got swept out and then reversed. Now we have this section of liquidity that was created. That got taken out. And then that got reversed, right? If you can identify liquidity, it should go hand in hand with structure, right? So liquidity is good for entries and targets, right? Being that we have two types of liquidity that we're dealing with. We have inner structure liquidity and outer structure liquidity. Based off of the trend in which you're going, you should be able to identify which is which, right? Most of your outer liquidity is going to take let me mark this up, right? So further back here, right, this is where your outer liquidity is going to take place, right? It's going to be outside the structure, right? And this is where your inner liquidity takes place, right? Now, if you look at liquidity, right, in equal lows or equal highs, right, it gets swept. Even in this move, right, these orders got swept and then what? Reversed. You can identify entries or targets using this as an additional confirmation, right? Liquidity likes to get swept, right? And liquidity just comes in the forms of these equal lows or equal highs, right? Now, with liquidity, it does not have to be the wicks. It can be the bodies of the candles as well. It just has to be relatively equal lows or highs. And you can use this, right, as an additional confirmation for your trade. This trade right here had every single confirmation, right? We got structure, break of structure, liquidity created, fair value gaps, right? Look at the time of entry when it tapped this order block. 150, 155, right in between our zone of our first 15 minutes, or the last 15 minutes of the top of the hour and the first 15 minutes of the top of the hour, right? Literally tanked. And this was the start of the move for the whole day. It sold the whole entire day, even up until the morning. This was the original entry for this wholesale. This entry right here did, let's see, right? Sheesh. Man. 1,300 pips. 1,300 pips, right? On one contract. Each pip is worth 10,000. I mean, 1,000. Or each pip is worth $10. So this is a $13,000 move, right? Off of a literally a 5 confirmation trade, right? Everything is here. Broke structure, fair value gap, bearish engulfing, liquidity gets swept, right? Retracing within our time. This is what you want, right? And so this is what you will look for as far as targeting liquidity or using liquidity as targets or entries, right? Let's look for more examples. of where we would see liquidity, right, for entries. Let's see. Right here. Boom. Now, essentially, this is, or looks like it's consolidating, right? Let me try to highlight this. Boom, boom, boom. Where's my tools at? There we go. Essentially, this area looks like it's consolidating, right? We're making higher highs and higher lows, right? But no clear direction. While that is happening, it is creating liquidity, right? We got relatively equal lows in here, relatively equal highs in here. So literally, what happens is the highs get swept, right? And reverses. And then the lows got swept and reverses. But what did it play off of, right? Let's look at it again. Structure is first. From my previous low to my newest high, right? Liquidity was swept both ways, touched my order block, my last down candle before the up move. Literally touched it, took off, risking $700 for, guys, these moves is insane. Another 1,000 pip move. And this is the power of using all of your confirmations, right? Let's see what time this retracement happened. I bet you it had to be within a time. Oh, tap this order block right at, let's see, 1240, 1245. Yep, that works. 1245, we start getting our push. Yep. Hey, as long as it's in that last 15 to the first 15, I'll take it. So this is the power of using all 5 confirmations, right? We have structure. We're drawing it from a previous low to the newest high, right? We marking up our liquidity, internal and external. We understand that liquidity, the rules for it is to sweep, then reverse, right? Then we have liquidity down here that gets swept. And what happens? Reverse. And this reverse happens off the order block. So you're literally catching every pip, right? And you have multiple confirmations working for you. Now, liquidity can sound complicated, but all you're doing is looking for equal highs or equal lows. You're just going through and marking up where it will be equal. Another right here. We're getting a lot of liquidity right here, right? You just draw the line. Relatively equal, right? But we're bullish. So let's see if we have any entries from here. There we go, to mark it up. There we go. perfect example. So with this liquidity that was created, right? This is our double bottoms, right? We have triple tops, double bottoms. It gets swept, right? Everything gets swept. And after it sweeps, our inner liquidity or our inner structure liquidity sweeps that, comes off of where? Last down candle before the up move. Our order block is in the zone, right? Takes that off, doesn't come back. Literally, in this scenario, you're risking 320 pips for 389 pips, right? $3,000, close to 4,000. Just understanding, okay, let me mark up my areas for liquidity, right? And understanding that liquidity is going to get swept, right? I can understand that liquidity is going to play into my pullbacks, right? This sweep is your pullback, right? The reverse move that you're looking for is to make, in this case, we're bullish, so we're looking for the new high, right? Let's so once this liquidity creates this pullback, right? The sweep is the pullback. The reversal is the push to make a new high, right? So being able to identify this is so key. It's a very helpful confirmation to use. When you see this, it's just liquidity is extremely powerful, right? Now you will more so see this on Nas, but again, I just pulled up 2 examples from gold where this took place, right? If you're able to identify liquidity, trading can just be that much more easier for you. Now, all you have to do is essentially ask yourself, where's the money orders at, right? Where's the collection of entries, right? Or where's the market consolidating? Because I could use that, right? I remember, I think in my first market structure video, I talked about all the trends. You have your uptrend, your downtrend, and your consolidating trend. You don't enter the market when it's consolidating. However, this is where understanding consolidation will help you out as a trader, because this, right? Let's see. Right, this here, consolidation. However, we are still bullish. My higher time frame confirms that. Y'all see? Click up a time frame. Right? We're still bullish overall. However, I'm entering on the smaller time frames, right? For accuracy and precision. So just being able to identify zones like this, right? Okay, let's look in here. Let's see if something goes on in here. Let's see. We got a bunch of liquidity right here. Right, inner and outer. Right. So previously, right, we were in an uptrend. This broke structure to the downside, right? So if I'm looking for sales, right, it's my previous high to my newest low. Right? Oh, do that backwards. There we go. All right, let's see here. is my order block in the zone. Yep, I have 2 order blocks. This one's not. I have this one as well. And this is what it plays off of, this order block, right? So when we see this, right, we had a sell, right? It started playing a little bit. Actually, essentially more liquidity was created. As you can see, our liquidity got swept, and each time liquidity got swept, it reversed. Right, so once this liquidity got swept, because this was the first move, sweep, right, equal lows, what happened? Sweep, reverse, right? Didn't make a new high, right? Okay, if it doesn't make a new high, I'm still bearish, right? My breakup structure to the upside is what signifies a change of a trend, right? It didn't do that, did not make a new high, so I can still assume that we are bearish, which we are, right? So at this point, the market starts consolidating because it's fighting against 2 confluences, right? Liquidity gets swept, and it was fighting to make a new high. However, it respected structure first. That's how powerful structure is, right? The reason why we go over structure first is because it trumps everything. Every confluence, structure is going to trump, right? But we have 2 confluences fighting. We have liquidity and market structure, right? We fail to make a new high, therefore we're going to continue bearish, right? But the market starts consolidating, creating liquidity, right? So now, being that we're bearish and we're in this sell still, right, we understand that this is going to get swept, right? We have our reverse action, still failed to make a new high. If we did not make a new high, that means we're about to make a lower low, which we did, literally. All right, let's follow along. Right? Push down, creates liquidity, sweep. Right? Fails to make a new high, because this is my previous high. Right? Market starts consolidating. Boom. More liquidity, swept. Reverse, fails to make a new high. Tank. Now, we still have liquidity up here to get swept out, which finally works its way back to sweep this liquidity, right? So if you take your time and walk through, I know this might be a little bit complicated and hard to see, but if you take your time and walk through structure as it's happening, you will see liquidity get swept, right? And so this will help you see, okay, if you have something like this and you're in a trade, understand at some point this is going to get taken out. So you can use this and say, okay, I just want the drop, right? But you understand once this drop happens, it's going to get swept out, or it's going to reverse, right? Now, seeing how powerful this move is, right? You should have took your profit, right? 309 pips, right? That's $3,000, right? So understand, okay, this is a powerful move, but I can't hold a trade like this because I have some liquidity that has to get swept, right? And so that's how you can use liquidity as targets and entries, right? You're going to target liquidity for your benefit, identify it, right? Use it for entry, right? You want your sweeps and your reverses to play along with your structure. And so, yeah, anytime that you're looking for liquidity, you're just going to ask yourself, where's the money orders? Where's the collection of equal highs and equal lows? And you just want to mark those up, right? And once you do, you're going to see how powerful liquidity is to use it as a confirmation, right? And so again, y'all, just to recap, liquidity does not have to be just the wicks. It can be the candles as well. But most of the times you're going to see the wicks chasing liquidity and not the candles. But if the candle happens to close and create equal lows, you can that is acceptable for identifying liquidity as well. And then also, just again recapping, we have inner liquidity and outer liquidity, right? Our inner liquidity is going to be inside the structure, right? Our outer liquidity is going to be outside the structure, right? Both follow the same rules. Both follow the sweep and the reverse, right? And so yeah, with liquidity, that's pretty much it. The lows and the highs can be relatively equal, right? So it doesn't have to be on the money, straight line across like here, right? These are relatively equal. You should be able to draw a line, right? And the points connect. Liquidity, right? Liquidity happens, sweep, reverse. Every time, right? So again, this is a benefit. Let's see if we got some more. We got some liquidity right here. Equal lows. Right, what happens? Sweep, reverse. And you could use this to your benefit concerning structure and entries, right? You just have to go through and mark it up. Where is my equal lows at? Right? So that is pretty much it. As far as going over liquidity. Again, we will talk about this more on our calls. If you have any questions about liquidity, just feel free to message us. And liquidity, one of those things is it looks complicated at first. It's not complicated. Just literally go through and mark up your equal lows and equal highs, and then use structure to see, okay, liquidity plays into my structure, right? It's going to play into my pullbacks, right? It's going to play into me creating my new highs or my new lows, whichever trend that you're going. And so, yeah, that pretty much wraps up this boot camp, and we will see you guys. Actually, that wraps up our boot camp. The rest we will have an advanced boot camp next, where we are actually more so applying these strategies in real time. That way we can piece together and advance our knowledge within the strategy. All right, guys. See y'all later.